Oh, it's my honor and privilege to introduce our third witness. Mr. William B. Grant is from Garrett County, Maryland. If you rolled the mountains flat in Garrett County, it would be the biggest county I have the honor of representing, and it has the smallest population. So you know that Garrett County is a rural county and that Mr. Grant really understands community banks. We're glad you made it here, sir. Your county has had 20 feet of snow. The snow in his yard is above his waist, and he's pretty tall. And they're currently in the midst of another 2-foot snowstorm. We're glad you made it out. Thank you for coming.
Thank you very much, Congressman Bartlett. It's a real pleasure to be here. Congressman Minnick, Chairman Frank, Madam Chairman Velazquez, Ranking Member Backus and Graves, and members of the committee. As Congressman Bartlett noted, my name is Bill Grant, and I'm Chairman and CEO of First United Bank and Trust. My bank is a 109-year-old community bank located in the Appalachian Mountains, serving 8 counties in Maryland and 4 counties in West Virginia. This recession is one of the worst we have ever faced. While the statisticians will say that the recession has ended, that is of little comfort to our region and elsewhere in the United States, which still suffers from high levels of unemployment and business failures. The impact of the downturn is being felt by all businesses, banks included. The cumulative impact of 8 straight quarters of job losses, over 8 million jobs nationwide since the recession began, is placing an enormous financial stress on many individuals and many businesses. This has caused business confidence to drop and loan demand to fall. Many businesses either do not want to take on additional debt or are not in a position to do so given the fall off of customer business. There are, however, some positive signs. We have heard from bankers that small businesses are now returning to test the market for loans. It will, of course, take time for this interest to be translated into new loans. In the previous recessions, it takes generally 13 months for credit to return to pre-recession levels. Banks have many pressures to face in the meantime. The commercial real estate market will pose a particularly difficult problem for the banking industry this year. The CRE market has suffered after the collapse of the secondary market for commercial mortgage-backed securities and because of the economic slowdown that has caused office and retail vacancies to rise dramatically. This has made CRE takeout financing very scarce and leaves banks with loans that are stressed. Regulators will continue to be nervous about the trends in CRE lending and will continue to be highly critical of bank CRE portfolios. We have heard anecdotes from our members about examiners who take inappropriately conservative approaches in their analysis of asset quality and who are consistently requiring downgrades of loans whenever there is any doubt about the loan's condition. This is especially true of CRE loans. Examiners need to understand that not all concentrations in CRE loans are equal and that setting arbitrary limits on CRE concentrations has the effect of cutting off credit to credit-worthy borrowers exactly at the time that this Congress is trying to open up more credit. The American Bankers Association appreciates the initiative of President Obama, which he outlined in his State of the Union address, which would provide additional capital to small banks who volunteer to use it to increase small business lending. A key factor to this proposal is removing it from the rules and regulations of the TARP stigma that we've talked about. As this program is developed, ABA recommends that Congress and the administration create criteria that will allow all viable community banks to participate. Further, we propose that Treasury offer assistance to those banks that did not qualify for the Capital Purchase Program funds, but that can demonstrate the ability to operate safely and soundly and survive if given a chance with this necessary capital. The focus should be on whether the bank is viable in a post-environment or investment basis. Otherwise, Congress will miss the opportunity to help the customers and communities of many banks across this country. We also appreciate the work this Congress has done to increase the guarantee of the SBA's 7A loan program. Subsequently, the SBA expanded eligibility to small businesses by applying the broader standards used currently in the 504 program. These very positive changes mean that an additional 70,000 businesses will be eligible to participate in the 7A program. The success of small businesses and local economies depends in large part on the success of the community banks. We must work together to get through these difficult times, and I'd be happy to answer any questions you might have. Thank you very much.